FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And of course, welcome back to FXN Trading Group's TMM24 Trading with Market Makers series. This is going to be week 4. Guys, as we get into week 4 now, we've already covered market cycles, peak formations, resets, London session patterns. So we've covered a lot of content. So make sure that if you're just starting out to watching this series, please make sure to go back to week 1 so you do not feel lost as to what's happening and how we're putting on every single week. We're building each week up and adding new concepts so you can start to build out the strategy. If you're new to the channel, my name is Mark. I've been trading since 2011 and I'm just here to show you exactly my trading strategy that I've been using now successfully and consistently for going on 7 years now. So week 4, let's get into it. First things I want to cover is some key points to remember as we're coming off what we just discussed last week with London session setups. Remember that we don't trade every M or W pattern we see. We focus only on the best patterns that offer the highest winning percentages. Our selected patterns are very specific, and there's a reason for this precision. The pattern does not occur every single day. We aim to find 3 to 4 high quality trades every week. If you can catch 3 to 4 great trades a week, that should be enough. The rest that we're talking about is literally your capital. How much money you make is determined by the capital that you have on your account, not by the amount of trades that you take every week. If you have $20,000 in your trading account, pretty obvious that you're going to make a lot more money than someone that has $1,000 in their trading account. Simply put, the person with a $20,000 account is able to trade a higher lot size, which of course per trade is going to make a lot more money than a person that only has $1,000 in their trading account. So very important that you understand as we go through this strategy. Every pattern that we trade is very specific and has a very specific set of rules. When we get into the entries and things of that nature, you'll see why. But it's important to understand that what I'm giving you here in these weekly sessions, in these weekly videos, are literally things that took me hours and hours and hours of back testing to learn, figure out, test, and then execute consistently. So I'm telling you to learn from my many years of mistakes that I made early on. Focus on the only best setups, best patterns that offer the winning highest percentages. How do you know that? Well, if once we build out the strategy here with the entries and everything like that and the exit strategies, you're going to have everything that you need in order to create a trading plan that best works specifically for you, because not everyone has the same trading plan. Not every trader trades the same patterns. Okay, as we go through this specific strategy, I don't want you to just automatically think that you're going to have to trade all these specific patterns, 4, 5, 6, 7 patterns. What I want you to do is I want you to grasp the information, and then through your own back testing, you get to pick out what patterns you feel you identify with the best. And then you're going to go ahead and build a trading plan based off of those specific patterns that you like. What I like, you may not be good at. What I am not good at, you may be very good at. Okay, so everyone is different, and that is perfectly fine, and that is okay. I want everyone to have a unique take on what patterns they trade, what sessions they trade, everything. You are your own unique trader. Okay, I'm just giving you a lot of different options, and then you can go ahead and customize them to your liking as your specific type of trading. This week, let's go into and talk about the New York session. So last week we talked about the London session. This week, let's talk about the setups for New York session. So when it comes to the New York session patterns, We basically have four of them. The first one is a type 1 multi-session. The second is a type 2 multi-session. Third is a continuation trade. And the fourth is a reversal trade. Now, these are the four patterns that you're going to be trading if you trade the New York session. All right. Me personally, for example, I only trade continuation trades. That's 95% of my trades so far in the New York session. So, for example, you may, throughout your back testing, you may learn or find out that you really enjoy reversal trades, or that you might enjoy more type 1 multi-session patterns. Whatever those patterns are that you enjoy the most, those are the ones that you should focus on. Okay, and those are the ones that you should build a trading plan around with this strategy. So let's go to the whiteboard now, and let me break this down for you as far as the New York session patterns, and then we'll go ahead and also take a look at some examples on the actual charts. Okay, so here we have the whiteboard, right? So now let's go ahead and break these down. So what we're going to do is let's go ahead and draw out our Asian session, right? There we have our Asian session. And so let's describe what's happening here in each of the actual setups. So let's start first with a type 1 pattern, right? So a type 1 multi-session pattern, all it is essentially price action is moving straight across like this during the Asian session, and then it breaks higher than the Asian session, right? And then what will end up happening is, of course, we start to get the first leg to form, right? So this right here, this move, this right here is going to be essentially the false move that market makers do, right? So we have the false move, okay, which creates the first leg. But then instead of going back up for a second leg, like we normally would see, market makers extend this apex all the way out to the second box, basically the US box. So let's say this is the London box here, and then we have the US box right here, right? So all the type 1 is essentially when the first leg happens inside of the London box, second leg happens inside of the US session box. Now, are there going to be different variations to this pattern? Sure, there are going to be different variations to this. So here's one variation that you could very well encounter. Okay, let me go back here and I'll show you the variation here. So the variation would be this. Here's one variation of it. You still have your Asian range right here, and then we still get the push up like we normally do, right? And then we get the M pattern to do it, but here's the difference, okay? Let's say that this would be the London box and this would be the US box. What do you notice? We notice that this first leg is not in the box of London, right? But the second leg is in the US box, okay? So I want to stress this out to you guys that where the first leg is created, whether it's inside of the London box here or not, doesn't matter, okay? The only thing that we care about is where is the second leg created at, okay? The second leg has to be created in the US box, okay? Has to be created in the US box. So we have two different variations, right, that we can see essentially happening from that. We have one where you could get the first leg not inside of the box, and then the second one where the first leg is not inside of the box. Again, the first leg, we don't care whether it's in the box or not. Okay, the only thing that we care about is going to be the second leg. All right. Now, the next thing that we could see as far as the pattern goes, this is going to be a type 2 pattern, right? So type 2 patterns work the same way in the sense that Asian ranges come and then boom, type 2s, right? They're going to stop at the top of the Asian range and then they're going to extend out like this, right? So you'll have, there's the London box, there's the US box, right? It's the same thing, okay? Same scenario. The only difference, obviously, is where is the M being formed. Obviously, on type 2 setups, right, the M is going to be formed at the very top of the range, like this, right? Type 1s, type 1 patterns, as we just saw, are going to be created by breaking out of the Asian, okay? By breaking out above or below the Asian session. Let's say this is a buying scenario. Well, a buying scenario would be basically like this. This would be the London box. This would be the US box. The same scenario, just flipped. Okay? It's going to be the exact same thing, essentially, for a scenario for a type 2 multi-session, right? It's the same thing. The box will be here and the box will be here. So the same things that play out in type 1s will play out in type 2s. The only difference between the type 1s and the type 2s is where do they stop, right? This will be a type 2 because it stops at the bottom, right? Type 1s go past that and do create, the multi-session down here, okay? So type 1 multi-sessions happen down here or up here, while type 2 patterns happen right at the bottom or the top of the Asian range. Okay. Now we're still looking for the same things that we were looking for the other patterns, right? We're still looking for the railroad track, right? We're still looking for the railroad tracks. We're still looking for the star patterns, okay? And we're still looking for the quarter woods, okay? We're still looking for those in the second leg, okay? These are the ones that we want to see on the second leg. You'll see them also on the first leg, but we want to see this, if an M is like this, we want these two to create the second leg, right? That starts to go down after this. You get what I'm saying? So very important that we're still searching for the exact same thing. So nothing of that, of that changes. It's all the same. All right. So it's not going to be, it shouldn't be too crazy difficult for you guys to understand because it's all the same thing. It's just essentially where the timing of where the second leg happens. But we're still looking for the exact same thing that we've covered in the last two previous weeks. Okay. So I think that the type 1s, type 2s, multi-sessions are pretty self-explanatory. Now let's go ahead and talk about a continuation trade. All right. So a continuation trade, let's make this a sell option for a continuation trade. All right. And I'm just going to show you essentially one way that these could develop. So on a continuation trade, let's say we're moving like this outside of the Asian range. And then let's say you get something like this. Okay. Let's say that's what happened during London. Now, the important part of the continuation trade is this right here, this pullback. Okay. This pullback is the most important factor of the continuation trade because the continuation trade, all it's basically doing is continuing the move that happened during London session. So when we're looking for continuation trades, the first thing that we need to see is, did we have an aggressive move that happened in London? Yes or no? If you had an aggressive move, okay, great. Did we get an actual pullback that happened? Now, this pullback is very important because you want it to happen at a very specific time. Okay, this pullback, ideal situations out of the data that we've gathered, is you want this pullback to start at around 7 a.m. in ideal situations. At the very top here of this pullback, all right, you want this pullback right here at the very top to be anywhere, from 9 through 10, 10:30 max. So you want to be at the very top here at around this time. Also, another factor to this this continuation trade is that you will see the 50 EMA. You will see the 50 EMA be right there along with it. Almost the same kind of scenario of how you see a type 3 and the 50s right there. The same scenario for this. Okay, you're going to see an EMA right here as well. Okay, because that basically the EMA is what's going to help push price down. So all those things are what we want to see in a continuation trade. All right, so let me show you another example here of a continuation trade, because they're all going to be, similar, but at the same time different in those aspects. So here's another one. So we have, again, the Asian range moving across, doing this. You have this huge move in London, but then right at 7 o'clock, you start to get a pullback. And then that pullback just also happens to go right to the 50. If that pullback goes right back to the 50 and the timing of it is right, 9 to 10:30 or so, right? Boom. You can expect a continuation trade. The key with the continuation trade, guys, is the fact that, remember that most of the time, it's going to be either a reversal or a continuation trade most of the time here. So on a reversal trade, that which we'll talk about next, you're going to see those. You're going to see where price action is at the beginning of the US session and be like, okay, well, if we haven't had the pullback already happen, then the only option that we would have would be a reversal trade, right? So you're gonna start to see, as we get into these examples of what I'm talking about. All right, but the most important thing on a continuation trade is this timing right here and this pullback, because that's what lets you know, okay, there's a very good chance that this might be a continuation trade. Okay, so here's are some examples of continuation trade. Let me draw another one. This was, let's just say this a buy option. All right, so here we go, Asian session again, and then we have this big move here in London, but then at around 7 a.m. or so, we start to get a pullback, right? And then that pullback just also happens to have a 50 that's right here. Okay, and then we can expect a reversal, a continuation trade out of this. Okay, the important part to remember is the timing of that 9 to like 10:30 time frame or so. Okay, is that you don't want to be at the high and you don't want to be at the low of the day, right? We're pretty much in the middle. And so because you're in the middle, it's not going to be a situation where you're possibly going to get, a second leg to come down like this. Okay? Because by the time this happens, it's like 12 o'clock already. It doesn't make sense. Right? So that's the point right there. Is that on a continuation trade, you're not at the bottom, you're not at the top. You're literally like in the middle. And so you can expect a continuation trade to go in the same direction of the big move that happened in London. Now, also, what will help you with continuation trades is the fact that you'll also notice that you're coming off, like a peak formation low, which we'll get to in the next several videos. But the directional bias that you're going in is essentially going to go with it as well, just like type 3 setups. Okay. So all of these factors help into you knowing that it's a continuation trade. But the most important thing I want you to just see right now is just the pattern and how it looks, right? So you can understand how it looks, what are the different variations of what it looks like. And then once we start to piece in peak formations and cycles and things of that nature, you'll see that when these happen, you'll see what I'm talking about, that you'll be coming off a brand new peak. And all of this does is just help you push away from that peak formation. Okay. So that's going to be a continuation trade. Now let's talk about the last one here, which is essentially a reversal trade. So reversal trades I believe, are pretty fair and simple to understand, right? Let's say here is the Asian session again, and then let's say you have a type 1 that happens, okay? Let's say you have a type 1 that happens in London. All right, the reversal trade is basically when you get a reversal that goes the opposite of what happened. And then it goes literally most of the time, I would say 90% of the time, it'll go right to the 50 and then price will consolidate. Okay. So that's all a reversal is. It's just a reversal of price action. So think about it like this. Okay. If we had, here's the Asian session again. If we had a type 1, right? So let's say this right here, here's a type 1 coming down. Okay. And let's say we went down, whatever, 37 pips. Okay. And then we're into, here's the New York box right here. And we're starting to do this. We're starting to get a pattern here, a reversal pattern, a W basically. Okay. You can expect this W for the majority of the times to basically go right to the 50. And then from there, price action is going to consolidate for the next day. Okay. The trade itself that we would be looking for obviously would be the same thing that we'd be looking for on this, right, which is the second leg of the M. In this case, it's the same scenario where we're looking for the second leg of the W. Now, importantly enough, is that this particular trade setup here, because it normally stops at the 50, you're only going to get about 20 pips out of it most of the time. So just keep that in mind. Is that the majority of the time you're about 50, about 20 pips is what you're going to get out of that particular pattern. Okay. So let me show you again the same thing. If this was a reversal coming off of the high, let me draw this again here for you. So here's one where the Asian session's done, pulls down, you get a type 1, goes back up, and then you basically make a reversal here and then consolidate for the rest of the session. So let's say this right here is your New York box, and then from 12 p.m. on, it just goes sideways. And then of course your 50 EMA is going to be right here, and it's just going to go there and it's just stop. The best reversals are essentially whenever you have a type 1 pattern in London. So if you get a type 1 pattern in London, that would be the best scenario for you to get a reversal trade in the US session, because you're going to have plenty of room. Because of this move here, you're going to have plenty of room to make a reversal. So keep that in mind whenever you're thinking about a reversal. So if you get a type 1 London, that's going to be probably your best shot in the US session is going to be a reversal. Does that mean that that's the only one that you're going to get? No, because there'll be times when you get a type 1. There'll be options when you get a type 1 in London, and you're going to end up getting a continuation trade. So this could be a type 1 in London, and then right at 7 o'clock, it starts to do this. And then now what? Now let's say it's 9 to 10:30. and you're here. Again, you're not at the low, you're not at the high. You're in the middle, right? So if that's the case, I expect a continuation, especially if you're coming off a peak formation low down here, right? And this is a new cycle going up. Your bias is, let's say, to buy. You know, if your bias is to buy and you get a type 1 like this, man, that's a really good, this is going to be a really good one, a really good continuation trade. So now that I've drawn this out for you, what do they actually look like on a chart? Let's go ahead and let's take a look at all the different patterns on a chart so you know exactly what these things look like. All right, so here's an example of a reversal trade. All right, so the reversal trade is basically here. Here's your first leg, comes up, comes back down, retests that same low, and then goes right to the 50 where it consolidates. So that right there would be a good example of a reversal trade. Now here's an example of another reversal trade, but I want you to notice the difference, okay? Because the reversal trade itself would be here. This would be the first leg, comes down, goes back up, and then gives you the second leg right here, which obviously goes right to the 50 and then it stops. Okay. Now, what I want you guys to notice about this is the fact that during the London session, we got a type 2 pattern, right? This was a type 2 pattern. Because it was a type 2 pattern, right? I want you guys to notice how you didn't really have a lot of room, essentially, to trade this very well. And what I mean by that is, if this was a type 1, it would have went down here. You would have had, much more room to go on the reversal trade. But nevertheless, this is a reversal trade in the U.S. session. You could see how we have other confluences where it goes up to the 200 EMA and then comes back down again. But essentially, you get the idea or the pattern itself. I mean, it's basically how you get a W, and then essentially it ends up being an M at the end. Okay, so it becomes basically that W and then a reversal, which is an M. Here's an example of another reversal pattern, right? So we had a type 2 again in London, goes down and then gives you the reversal. You can see the reversal goes up to the EMAs and then consolidates for the rest of the day. Okay, the trade that we're looking for would be this second leg, obviously, and we'll talk about how to enter and all that stuff in a different video. But that right there would be another example of a reversal trade that happens in New York. Now notice how on this reversal trade, okay, you could have thought that this right here was the first leg, and that's perfectly fine. Okay, again, the same rules apply where the second leg, obviously because it's a reversal, has to be in the US session. That's the most important thing. It's the most important thing. All right, so here is an example of a continuation trade. Okay, notice the move, the aggressive move that happened in London, and then this one actually starts to pull back super early. But look what happens right at 7 o'clock. Boom, pulls right back to where the 50 is, and then here is that you're not at the bottom, you're not at the top, you're literally in the middle, right? And then boom, it drops. So this is an example of a continuation trade. The aggressive move from London, and then you start to get the pullback. This pullback was not, the best, but it still is a pullback. It just started super early. It started at 4, but you can see right at 7 o'clock it starts to pull back. And then by the time you're up here, it's anywhere from 9:15, 9:30 candle, it's done. All right, so here is another example of a continuation trade. Again, an aggressive move in London, and then a pullback that goes to the 50 and then drops. This right here is the trade. It just continues to move from what happened in London. That's all it is, right? So think of it like this, like this, like this. A move, a pullback, and then another aggressive move. We basically want to buy the top of that pullback. That's all it is. That's all we want to do. All right, here we have an example of a multi-session type 1 pattern, right? We have the pattern is right here. Okay, that's the pattern. We have the first leg in London. Second leg is going to be in the New York session. All right. Now notice how the second leg here gives you the pattern, right? This right here is what? Is a two star star pattern, right? Two doji star pattern right there. That's your second leg pattern right here. So this would be a good example of a type 1 multi-session pattern that we would trade in the US session. I think these trade examples honestly would be very simple to trade because you already know that we basically had a first leg in London. Okay? So think about that. We had a first leg in London already. We had a first leg in London, and then we just needed to wait for the second leg to come up and retest the highs. Look how it's retesting the highs here, right? Look at these, all of these things here. 1, 2, 3, 4, 5, 6. So 6 times in the US session, they basically swiped up and grabbed orders right here. That's all this is just grabbing orders, grabbing orders, grabbing orders. Notice how they did not want to close above that. I mean, you can literally draw a line and you could see it did not close above that. Okay, that's for a reason. Okay, this is happening for a reason. And so this is a behavior that you want to pay attention to when you're looking for the setups, for the second leg, for the continuation trades, things of that nature. Okay, you want to look for this because this is what they do all the time when they're creating those second legs. Here we have another type 1 multi-session pattern, right? We have the first leg created in London, and then the second leg created in the US session. All right, there's a lot of things going on here, but if you're thinking that this is a second leg, this can't be a second leg because it doesn't meet the rules requirements to be a second leg. You don't have 5 candles between the first and second legs, so this would be ignored. Do you see how the rules come into play? Why we have the rules that we have? It's because of that. So this entire thing is the first leg. Second leg is this. Here we have another type 1 multi-session setup. We have the first leg created in London, and then it goes up and reaches higher. Why is it reaching higher? It's reaching higher than this. It's reaching into this area because they want to grab all of the orders that are sitting here so that this move here could be possible. Understand that this move that they want to make, they need orders to do that. So while people are buying here, they're taking the other half of your order, which is the sell. You can't just press buy and then it just buys it for you. There's the ones that sell it to you, so they hold on to all the sell orders. Is all that they do. Okay, so once they get all of the traders, once they get all of the traders here buying, they've been taking the other side, okay, of that order. So while you're buying, right, they're holding on to the sell. And as soon as they climb up here to grab orders, here's your clue right here. Okay. As soon as they grab those orders, they have enough. They dump all of the sells at once. This is what creates this right here, straight down. When you notice the patterns, look at all of the patterns. Type 1s, 2s, continuation, type 3s, all the patterns. Once they think about this the entire time. Once they grab all of the orders up here, everything is just straight down. It's just a relentless sell-off because they're dumping it all at once. So always remember that. While everybody's buying this stuff, right? They're selling it to you and they're keeping the sell orders until they get all the way up here. Once they get up here, they're dumping it all at once. And that's what creates the sharp move down, straight down, nonstop. That's what creates it. Okay, is them dumping it all at once. Here's another example of a continuation trade. We have a sharp move out of London, and then we start to get a pullback. Where does it pull back to? Pulls right back to the 50. What's the timing of it? 9:15, and then dumps. And yes, it comes back, but then it continues to dump more. So that's what they do, okay? But this is another example of a continuation trade. If you come in late, some people might see this. Some people might see this as a multi-session pattern, right? I get it. But this wouldn't meet your rules. Once we get into the rules of entry, this wouldn't meet it. This would not be a trade for you. Okay, once we get into the rules of entry and all that stuff, you'll see why. But this right here, if you're looking at it from this perspective, remember, you don't have the rest of the candles to know what's going to happen next. But you see this sharp move and then a pullback, right? You're not at the bottom. You're not at the top. You're kind of in the middle. So again, what's the pattern? So there's your continuation trade, another one. Here's another continuation trade. Here we get a type 3 in London, straight up. Then what happens? 6:15, 6:30, we start to head down. Okay. Now, this is a different variation because I want you guys to notice two things. Okay. Notice how this one doesn't go, the pullback doesn't go exactly to the 50, but the 50 is there. And then also the timing of it, this right here, is super early, right? So 8:15, 8:30, right? So it's super early. So pay attention to this because there's variations, obviously, of the same thing. But the majority of the ones that we want to trade happen between the window that I told you. But I need to show you this so you can see the different variations of a continuation trade. But they all have the same elements that make up the structure of the continuation trade. Here we have an example of a multi-session type 1 pattern. First leg is here, comes down, grabs orders, and then takes off. Where does it take off to? The 50. Consolidates for the rest of the day, and there you go. Now, pay attention to this right here. What's created on the second leg? Oh, look. It's a star pattern. That's created on the second leg. First leg, more than 5 candles between the first and second leg, and the second leg gives you a star pattern. There you go. There's your trade right here. So this right here would be a good example of a reversal trade. So we have, this is actually a trade out of the edge that happened in London. You can see here, goes up. And then here is your first leg, goes back up. Here's your second leg for the reversal, There's your trade right here. Where does it go to? Goes to the 50 and consolidates, right? Now, look at how this one created the first leg outside. It created the first leg outside of the box. You still have 5 candles between the first and second leg. But most importantly, what happened in the second leg? Oh, look, there's a railroad track that was created. There you go. Here's another example of a multi-session type 1 trade where you have your first leg is in the London session. Second leg is right here at the beginning of the New York session. Boom. What do you get here on the second leg? You get a star pattern. Where does it go to? Basically the 50. There's a trade. Your trade is right here. Here's an example of a continuation trade. You can see strong aggressive move happening in London and then started a pullback, pullback, pullback. Where does it pull back to? Right to the 50. What's the timing of it? 9:15. Do you get a pattern here? Yeah, you get a star pattern and then continues on. Again, a drop, a retracement, and then a drop. This one here, multi-session type 1. Clearly we could see the first leg created in London session. We get the apex here, and then you actually have multiple legs that happened here in the US session with different entry points that we'll talk about in examples like this. But ultimately, you get the pattern itself, which is a type 1 where it has, first leg in London, second leg in New York, and then it drops down. So this would be an example of a type 1 multi-session. Here's another example of a multi-session type 1. Obviously, we could see the pattern here. First leg at the end of the London session comes back up, gives you the apex, and there's the second leg in the box of the US session. Okay, I mean, these are all just, guys, the same patterns, just different looks, a little bit, different variations, but same thing over and over and over again. I hope you're getting this. Here we have a different variation of a continuation trade. We can see again the aggressive move and then the pullback that starts, almost reaches the 50, but the 50 is there, and then it starts to drop. This drop started at 10:30 or so, 10:45, give or take, but you can see just a different variation of the same thing. A huge aggressive move followed by a pullback and then more down movement, more selling. This one is an example of a multi-session type 2 pattern. So the first leg is here in London, and then we come all the way back down. You can see we're pinning the very bottom, and then we go up. Your trade is right here. That's what a type 2 multi-session pattern would look like. Here's another example of a type 1 multi-session. You can see this one, again, different variation. We have the first leg here, and then you could see how they basically move straight across, go up to create the second leg. And all they're doing here, guys, I promise, all of this up here, this blank space, is filled with nothing but a bunch of orders. All this is filled up with orders. They go up, create the second leg, and as soon as they grab all the orders, literally straight down. Literally straight down. So this is like an example of this type of an M. All they're doing is when you get this type of an M or this type of a W like this, all they're doing, guys, is they're literally grabbing orders that are resting below here, that are resting above here. That is all that they're doing. But this is another example of a multi-session type 1 pattern. This one, you just get to see how they're grabbing orders to create the second leg. Same thing here, guys. Notice the same behavior that I showed you before. The first leg is created, They go straight sideways, and then creating the second leg, what do? They go up here and they grab all of these orders that are sitting up here. This is another example of a type 1 multi-session, but I want you guys to understand why the pattern looks like this. Okay, it's the most important thing. I need you guys to understand, why does the pattern look like this? So when you see it happening, right? When you see this, when you're entering into the New York session, and you see this kind of behavior here, where they're just tapping, 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 tapping. All right, and then all of a sudden, they just go up and grab orders. And as soon as they have the orders, what do they create? And then they just go straight down. So just understand the purposes of why the M looks like that. This would be another example of a type 1 multi-session. I mean, it's pretty clear to see right there. First leg, London. Second leg, literally right at the beginning of the US session. So I'm trying to show you guys as many different variations of the right patterns that you want to look for. Here's a reversal where you have the first leg here and second leg down here. You can see this one goes up past and it goes right to actually the 200 EMA. This could also be very well considered a first leg also, and then you end up getting multiple legs on this one. What I want you guys to notice again is the same behavior that we just looked at. See how this is just flat across, flat across, flat across, and then boom, they go and grab it, right? Boom, they go and grab it, and then they take off. That's what I want you guys to notice. When it's just like this, and then it's just literally like flat, straight flat like that, very good chance you might gonna get a little spike and then a go. All right, guys, so I hope you enjoyed this week's video about the US or New York session patterns. I hope now that you have all of the patterns available to you, you will go through them and you will go ahead and do some back testing and start to identify which patterns suit your style of trading better. Okay, it is completely fine to trade only one. It's completely fine to trade 3, 4, whatever you like. The most important thing that I could tell you is just to make sure that whatever pattern it is you're trading, that it's a pattern that you feel the most comfortable with. That's the most important. Okay, because the worst thing that you can do is try to force yourself to trade a pattern that you identified through your back testing that you're not really good at identifying, or that you just get really emotional about that specific pattern. All right, so guys, do me a favor, like the video, subscribe to the channel, share the content, guys. I hope you're enjoying the series as much as I'm enjoying making it for you. Until the next video, guys, take care. God bless.